it does become very confusing behind the scenes when you're using multiple features of different ways to do this. But your payroll then would also have to have a separate payroll account so that your payroll, when you paid your payroll, it would actually hit work in progress, direct labor. Otherwise, it's just going straight to your bottom line, below the line, for payroll and wages, all in one little bucket, right? So you need to set up more than one chart of account for payroll if this applies to you. And if it applies to you and you wear more than one hat, sometimes you're the office person and sometimes you are working out on jobs, well, you need to pay yourself two different ways. When you're doing an office function, pay yourself with the office administration payroll category. And when you're out there doing a job, pay yourself with the work in progress direct labor GL, general ledger account, tagged to whatever project or job you're working on. And that way, these things can be separated, right? Because eventually, your work in progress, when your work in progress is done, then you move it over with a journal entry. You keep track of it by project or job, and your report will tell you how much you have built up in your work in progress account for that particular job. And when that job is over and you've billed for it, you take the total of your work in progress for that job, back it out from work in progress, it's no longer work in progress, and you move it over to cost of goods sold. If you have an inventory program and you're paying big dollars for that kind of software, it does that for you. If you want to use QuickBooks Basics with QuickBooks Plus, QuickBooks Desktop that's not enhanced in any way, it won't do that for you. You will have to do a journal entry to move it. And then when you move it, when you look at that profit and loss, you will see an accurate reflection of your loss or your profit on a particular job, project, or for a particular client. So, lots of you in here have multiple jobs going on. It's moving very fast. And so sometimes the idea of having to stop and make journal entries and move it over for every single project and job is just not practical. That's when the inventory software program is really worth it. But if you are accumulating work in progress inventory on a slower basis, on a slower timing, this could work very well for you. It's just a matter of remembering you have to match up the expenses on the profit and loss statement and the profit that you the invoiced income and the invoiced expense. It has to match for it to be meaningful. Otherwise, your profit and loss will always misfire. It will give you inaccurate information. So, before we leave this topic, any other questions? Okay, so now we're going to take this process and this understanding and the idea of matching, we're going to move it up and make it to where we can do this very quickly. All right, so back to that profit and loss statement where we're really familiar between top and bottom, above the line, below the line, and we're focusing now more so on our percentages. I do highlight here the payroll account, and I'm highlighting it here for a reason. This particular company only has one payroll account. All of their payroll related to cost of goods sold is in this line item. All of it. And so, do they truly have a 25% gross margin if they have above the line activity below the line? Is my 25% a true good number? if some of my above the line activity is actually sitting below the line, did my 25% just lie to me? Yes, it did. So that's where we go back to, on the back end, there is some bit of work to this. You have to make sure your payroll that belongs to the top goes to the top. Your payroll that belongs to the bottom goes to the bottom. All right, so I have made a correction on this, and I am moving this. I am moving what I think is my job labor out of my payroll, and now this is what we're left with.
So, as an individual, somebody like me that's not a accountant, QuickBooks guru, or knows anything, so clarifying that, how do you do that? Like what, I mean, how easy is it to take that account 6601 and move it up there? What, I mean, and making sure that it all flows.
You will have to start in a period where you have a place to start. You really can't start mid-month, and so if you are looking at last year, it's too late to really make any changes for that last year.
That's closed.
It's closed, right. And then you will always remember that when you reflect on your P&L for 2022, oh yeah, we were doing payroll a different way. But in 2023, pick the beginning of a meaningful period. Like, I would start July 1st and change this going forward. And the mechanics of it, any QuickBooks advisor can help you with the mechanics of getting it to your profit and loss statement set up correctly.
So it is as simple as putting in a new line item, a new item, and then, so couldn't I technically go back and adjust where